What's up, everybody? I'm Shamika Fox, your Santa Cruz real estate expert, and I'm super excited today to talk about the Santa Cruz real estate market, the economy as a whole. We're going to dive into tariffs, what they are, and how they affect the economy. We're going to talk about the stock market and people's 401ks. We're going to talk about interest rates, and then we are going to get more super specific about how all of these factors affect the Santa Cruz real estate market and the Bay Area. So stay tuned until the end. If you are thinking of buying or selling in the Santa Cruz area, this video is for you. If you find this video and the videos that we produce engaging, educational, or add just a little bit of value to your life and your decision of buying and selling real estate right here in Santa Cruz or anywhere in the country, please hit that like and subscribe button. We're trying to get to 1,000 subscribers by the end of 2025, and we are well on our way, but we are not quite there. So every subscription helps us meet that goal and helps us continue to produce these videos that hopefully help you and add value to your life. So let's dive in. I recently had the pleasure of watching Dr. Elliot Eisenberg, who is a specialized economist, and we get to see him on our MLS channel about quarterly, but he always has brilliant insight. He has statistical information. He has economic overviews, not just for our area in the Bay Area, but also across the nation. And recently he was on the MLS podcast and he shared some insight with regards to tariffs, with regards to the stock market, with regards to interest rates, and how all of those affect our Bay Area real estate market. So let's talk about tariffs. Tariffs are a tax that a country adds for imports coming into that country. And obviously, we have been hearing a lot about tariffs lately. And it's not necessarily the tariffs that will create our economy to go into a recession, but the uncertainty with regards to those tariffs that could potentially push us into a recession. Some days the president is saying that we're going to have tariffs. Other days he's saying that we're not having tariffs. He'll implement them. He'll take them away. So it's this constant struggle or battle between these different countries and the decision of whether or not we're going to be implementing tariffs, which is causing a lot of uncertainty and a lot of volatility in our stock market and our market as a whole. Historically speaking, tariffs have not pushed our U.S. economy into a recession. However, that said, the Smoot-Hawley tariffs, this act passed in 1930, raised tariffs on imported goods. While the Great Depression was already underway, Smoot-Hawley is considered to have worsened the situation by shrinking industries dependent on exports, disrupted trade, and rising prices. Tariffs can disrupt international trade flows, making it more expensive for businesses to import goods, which can lead to higher costs for consumers and businesses, potentially slowing down economic activity. So market volatility occurs when tariffs are put into play because we don't know what the actual cost effect will be on these imported goods. Now, understand this. When tariffs are implemented, the company that is importing those goods is taxed, but they are not the ones that absorb this cost. The consumer is the one that absorbs this cost. So if something may have cost $100 yesterday and the tariff that gets implemented increases the cost of that import by 50%, then the new cost for the consumer is going to be $150. A great example is during COVID-19 economic instability and supply chain issues, which tariffs will also affect supply chain issues. So we could go back to not being able to get the products that we want or need. But during that time, a piece of plywood one day was $40 and the very next day cost as much as $200. And this was a supply chain issue. Remember supply and demand. I always talk about supply and demand when we talk about the housing market. And if there's too much demand and not enough supply, prices go up. And if there's too much supply and not enough demand, prices generally go down. And if you watch until the end, you should watch until the end. We're going to talk a little bit about this and as it pertains to the Santa Cruz housing market, because something very interesting is happening right now with regards to supply and demand and the Santa Cruz housing prices. Okay, so that's a little bit about what tariffs are and how they can affect the economy. How they affect the housing market, let's talk about Canada being taxed or tariffed on imports, and they are a great supplier of our wood resources, our natural wood resources, which we use for the cost of building. You know where I'm going with this. How does this affect the housing market? If the builders cannot get the lumber that they need in order to build the houses at the cost that they need to be able to sell the houses for profit, it will slow down and possibly halt building. So what does that mean for our housing market? It means if we stop building, and this happened during the recession of 2008, 2009. It happened again during COVID when the cost of materials went too high, where the builders stopped building and creating additional supply for our housing market, which meant that we had lower supply, higher demand, and prices continued to rise. So that is how tariffs could potentially affect our economy and the housing market. Again, generally speaking, tariffs will not create a recession, but they have in the past, like I demonstrated, they have in the past added to the depression of the 1930s era. In this discussion with regards to tariffs, it seems that is more of the volatility with regards to tariffs. Are we implementing? Aren't we implementing? That is causing fluctuation within our market. So we will have to watch and see what happens. Let's talk about 401ks and the stock market. Many people, especially in the Bay Area, rely heavily on the stock market and their investments, as well as their 401k plans, to be able to reinvest in hard assets such as real estate. I know a lot of my clients come to me and they show me their stock portfolio and they say that this is where they will be pulling from in order to have the down payment needed, or in order to buy a property for all cash. They pull out of the stock market. So when the stock market is down or the stock market fluctuates, people are a bit more reluctant to pull money out of it because they don't want to lose money. And when the stock market's down, they feel as if they're losing money, even though it is just sort of fictitious in a way, right? Because you never had the money in the first place. It was always invested. But pulling the money out and reinvesting it when it's low always feels a bit more uncomfortable than pulling more money out when it's high. So that could possibly have a bit of an impact on our housing market because people tend to use their money for non-discretionary spending versus discretionary spending, such as vacation homes, second homes, or even just moving out of the area or buying a property like a rental or an investment property. Though I do have to say, when the stock market tends to show volatility, many of my clients end up pulling money out and investing in things like real estate, gold, and silver, which are considered hard assets because they feel like that has a bit more certainty or stability to back what they are investing in. So far in Santa Cruz, we haven't seen a tremendous effect with regards to the volatility or the fluctuation in the stock market, but it very well could happen. Santa Cruz County housing market saw a big jump in sales in March, and while it isn't uncommon to see the market heat up as spring takes hold, real estate agents and mortgage advisors continue to keep a close eye on an erratic economy. While many buyers in the market have not changed their course, those in the industry say that if the stock markets continue to perform poorly, buyers could freeze up from buying. Quick commercial break. If you are enjoying what you are watching and you would like more of it, please hit that like and subscribe button. We are trying to get to 1,000 subscribers by the end of 2025, and we are close, but we are not quite there. So thank you for your support. Moving on. Let's take a look at interest rates and what the Fed moves mean for our economy and for our housing market. The Feds are caught between a rock and a hard place. Unemployment is actually at about 4.1 to 4.2, which is flat, and that's actually good. We want to keep unemployment low and flat, and inflation is lower than expected, but it's still above what the Fed's target. So generally, if inflation is low, then we'll start to see interest rates coming down. But because there has been so much volatility in the market, the Feds don't feel certain enough to bring interest rates down yet. So we're still at a watch and hold pattern, which is probably why President Trump threatened to fire Jerome Powell, which may or may not happen. I have no idea. But he is very insistent on bringing interest rates down, which, as we've seen in the past, especially during the COVID era of 2020 through 2022, when interest rates were brought down between 2 and 3%, we saw so much movement in the market. There was multiple offers on every single house. Well, I won't say every single. There were multiple offers on most properties. We were seeing a massive appreciation, the fastest appreciation that any market's ever seen. Santa Cruz saw 27% appreciation in that 2-year period, which is unheard of. Generally speaking, we see between 5 and 7% annually on average, but that was 27% over a 2-year period. Something that we should be watching that is actually pretty scary to our economy is both that the bonds market is going down and interest rates are going up. So usually you want to see bond market go down and interest rates go down, but right now we're seeing the opposite. Bonds market's going down and interest rates are going up. So whenever you see people ditching bonds to get cash, that means people are scared and they're holding off on buying anything excessive. They are holding off on making any big life decisions. They're holding off on purchasing or selling real estate. That shows fear in the market. What could calm this uncertainty, and this is up to the administration, is a very clear and concise explanation as to what the U.S. wants to see with regards to trade with other countries so that we can prevent a trade war. If they say, this is what we want from China, this is what we want from any other country who does import-export with us, and once those things are accomplished, you can see a bit more certainty in the market. This could potentially halt the uncertainty and actually reignite our economy as a whole. But so far, we have not seen clear and concise actions from the administration. We will continue to watch and see what happens. One thing I can say, though, based on statistical information, is that the Bay Area, and we've talked about this a lot, we are a tight little bubble. California is the 4th largest economy now in the U.S. It just surpassed the Japanese economy, which is incredible. We have a very strong economy. We have always led the US and the world in technology. And now with the new influx of artificial intelligence, we're starting to see that segment of the economy grow in the Silicon Valley. There have been other areas in the US, such as Florida and New York, that have tried to grow these segments of the economy, but because we have been so established for so long, the network of people, the availability of engineers, the type of industry professionals is so well established in the Silicon Valley area that it has seemed to protect our economy in California and especially in the Bay Area, including the Santa Cruz area. So far, it seems that unemployment rates in the Bay Area seem to be pretty secure. Again, that has to do with technology growth and artificial intelligence growth. There are, however, differing perspectives as it pertains to a recession and will we go into a recession, as well as how will that recession affect the housing market and specifically the Bay Area housing market and the Santa Cruz housing market. The first quote is from Daniel Hale, who's the chief economist of Realtor.com. If the U.S. economy were to go into a recession now, home sales are barely above the long-term lows and may not have much further to fall. But economic stress among homeowners could prompt faster inventory growth and lead to softening of prices. This is a quote by Daniel Hale, chief economist of Realtor.com. And then let's look at the quote by Lawrence Yun, who is the chief economist of the National Association of Realtors. The lingering housing shortage and historically low numbers on delinquencies will keep home prices where they are, even if the country ends up in a recession. The U.S. housing market is resilient. Home sales across the U.S. are bouncing between 3.9 million sales and 4 million sales annually. For the most part, as far as sales go, historically speaking, this is the bottom of the barrel. This is the lowest that we've ever seen home sales across the nation. Now let's talk about interest rates and how interest rates pertain to the real estate market and our economy at large. We are, however, starting to see higher inventory rates. There was a lot of pent-up seller demand. Again, if you were a seller and you were in a 2 to 3% rate, it was really hard to make that decision to jump up. If you were a move-up seller or a move-down seller, or if you didn't have to sell because divorce or death, or you were moving because of your job opportunity or something of that nature, it's really hard to convince sellers to put their home on the market that now is a good time to sell. But now we are starting to see pent up seller demand because they've wanted to sell, but they haven't been able to because they've had golden handcuffs and they've been locked to their low interest rate. So the interesting thing is now we're starting to see sellers sell, even though our interest rates are not below 6%. Originally, that's what we thought it would take for a seller to get off the fence and decide to sell. Now, I think because of the volatility in the economy, those sellers who have been waiting to sell are now putting their homes on the market because they want to try and capitalize on potentially higher market than what might happen should we go into a recession and should that recession affect the housing market. Now let's take a look at interest rates and how interest rates are affecting the U.S. housing market and the housing market right here in the Bay Area and specifically in Santa Cruz. We're hoping inflation falls, but we're also hoping to have stabilized job market, and we're hoping that the combination of those two things brings rates down to an affordable level. So if interest rates come down because inflation is falling, that is the dream scenario. That means that unemployment stays around 4%. That would spur some activity in the housing market because unemployment is low and because interest rates are dropping. Okay, so we've talked about tariffs and how tariffs affect the economy as well as how tariffs affect the housing market. We've talked about the stock market and people's 401ks and how they affect the economy and how they affect the housing market and how they pertain to the Santa Cruz housing market and the Bay Area housing market. And we've talked about interest rates and how interest rates affect the housing market and affect the Bay Area and Santa Cruz housing market as well as seller pent-up demand. So now I'm going to jump in and I'm going to give you a detailed overview on the current Santa Cruz housing market. And we're going to talk about the average days on market. We're going to talk about the list price to sales price ratio. We're going to talk about the average sales price in Santa Cruz. Is it going up? Is it going down? Are we heading into a housing crisis or a housing recession? And how do all of these factors affect you in making your decision whether it's the right time for you to buy or sell right here in Santa Cruz? I will say this. This is the market that you buyers have been waiting for. All of my buyers say the same thing. I don't want to compete. Why you don't want to compete? Because you don't want to get stuck in a bidding war. Right now, we are still seeing multiple offers on some properties. Those properties are priced aggressively, and they are very desirable properties in town, close to things, etc. Other properties that are maybe a little bit more expensive or higher than what the market will bear or on the perimeter of the most desirable areas of Santa Cruz County are not seeing as much traction and action. So if you've been considering buying a home, I swear to you, this is what you've been waiting for. You'll be able to refinance your loan once rates drop, which they will eventually go down. But if you want a less competitive market, this is the market you should jump in at. Sellers, we are seeing the highest level of inventory that we've seen in the last 10 years. For single family homes right now, we have 430 active single family homes that are on the market in the entire county of Santa Cruz. So buyers, again, if you were thinking about buying a home before, get in the car, start driving around with your realtor, call me, make an appointment. Let's get you in to see houses. Before, I could show you one house that fit your criteria. Now I am able to show you somewhere between 2, 3, or even 4 properties that will fit your criteria. You have options and you have less competition. Not because there's fewer buyers in the market, but because there are more homes to choose from. So your buyer pool has diversified. In March, there were 93 home sales countywide, which is compared to 67 in the same month last year, a 38% increase. However, the 93 sales were about on par with the 96 sales in March from 2023. Last year, 2024, was our slowest real estate year that I've seen during my entire career, except for the year of 2008-2009 recession. Last year was the slowest year during my 20 years in the business. Aptos, Santa Cruz, and Watsonville were the usual hotspots for sales for that month with those 93 sales for March. The county-wide median sale price was up about 14% in March compared to the same month last year, which is up from $1.25 million March 2024. That's pretty significant. The number of homes on the market across the county is much higher than it has been recently. There were 367 homes on the market in March. Currently, right now, today, and this changes every day based on properties that sell and properties that come on the market. But today there are 430 homes, single family homes on the market in the entire county of Santa Cruz. The number of homes on the market across the county is much higher than it has been recently. Again, we are at a 10-year high as far as inventory goes. There were 367 homes on the market in Santa Cruz County in March, up about 45% from February, and nearly twice as many as there were March 2024 when we were at 185 homes on the market. Properties sat on the market an average of 42 days in March, and most months in recent years clock in at 40 to 50 day range. Factors affecting the market are the days on the market, which were about 42 days on market average, more inventory or homes available than we have seen in the past 10 years, the days on market, and the inventory and sales to original list price ratio, which came in at 98.2%. To put that into perspective, during the COVID housing rush, when rates were between 2 and 3%, our list to sales price was averaging at least about 107%, meaning all homes or most homes were selling 7% higher than what the list price was. And currently our average sales price for Santa Cruz County is at $1,444,000. So even though our days on the market is going up and our list to sales price ratio is below 100% and we have more inventory than we've had in the last 10 years, we're still seeing the average cost of homes go up. So that just shows us a bit about what we're seeing in our Santa Cruz market. We are at 3.8 months of inventory. Again, remember, 6 months of inventory shows an even market, shows us that we have an even market between buyers and sellers. We're at 3.8 months of inventory, but we have so much buyer demand, we're still seeing the properties that are put on the market sell and sell. I would say actually that's the average time to sell, around 40 days, is not terrible. During the Great Housing Recession, we were seeing properties sit on the market for 6 months or longer before they sold. So it is an interesting time in the market. There's a lot of volatility. There's a lot of movement. There's a lot of new inventory on the market. There's still buyer demand, and things are still moving. If you are considering this time to sell your home, make sure that you price your home strategically. Make sure that you prepare your home. Buyers are wanting to buy homes that are ready for them to move in, that they don't have to do a ton of work on. If there is a lot of work to be done, the buyer's expectation is that they are going to get a significant discount. Buyers are able to, in this market lately, have a bit more flexibility with regards to their negotiation. As for before, when rates were so low and there was 10, 20 offers on a property and you weren't able to have contingencies in place or time to really think about your decision because you were competing with so many other offers, now we're seeing buyers putting their contingencies back in place, visit a property a couple times before they decide whether it's the right property to write an offer on. But we are still seeing movement in the market. Again, if you're a seller and you're thinking about selling, make sure that your property is prepared for sale. I have a great strategy for property presentation and preparation. So if you'd like me to come over and do a walkthrough and we could discuss what you should and should not do when preparing your home for sale, give me a call. I'd be happy to meet with you. And be strategic with your pricing. If you're pricing your house too high and you are chasing the market down, you're going to end up losing money versus pricing it aggressively and potentially obtaining multiple offers and selling for that higher price. So if you are thinking of buying or selling a home right here in the Santa Cruz area, please reach out to me. I would love to be your realtor of choice. I'd love to help navigate the process with you and for you. And if you are thinking of buying or selling outside of the area, give me a call or fill out the form below and I will connect you with a realtor in your area. Otherwise, please hit that like and subscribe button. I am trying to get to 1,000 subscribers by the end of 2025 and we are on our way, but we have not quite hit that goal. So please hit that like and subscribe button so that we can continue to add value to your life on a weekly basis. If you would like more information on the Santa Cruz real estate market and how it pertains to you and your real estate goals, please call me. I look forward to connecting with you. And until next time, make it a great day.